Okay, folks, in this session, we'll see the contents of the tax return and certain clarification with regards to this. So, for the tax return, the Article 53 specifies that following items has to be included. Now, we are expecting that, of course, the tax return again would be online and it will be using the same tax portal which is currently available for VAT. One main difference as compared to VAT is that in VAT only the entities normally whose taxable supply exceeds 375k has to apply for VAT registration and file the tax return. But here every company which is incorporated in UAE will be required to get a registration and file for it. So even if you have zero taxable income, so let's take an example of a company which has no transactions during the year, whether for expenses or for income, they still have to file a tax return. Okay, and of course the tax return will be filed for a specific period. It will contain name, address and TRN of the taxable person. These things we are expecting that these would be automatic. These would be available in the FTA system already. Accounting basis which we are used in most cases, it would be accrual based accounting. Taxable income, of course, as we just calculated in our previous session, after adjusting all the inadmissible expenses or excluding the incomes which will not be taxed. The amount of tax losses which are carried forward and which are adjusted would be specified here. The amount of tax losses which we have transferred within a qualifying group. If you remember that when we were discussing the concept of qualifying group, we have said that we can transfer the losses between the entities which form part of a qualifying group. The available tax credits which are claimed or any withholding taxes which are claimed, those are also adjusted and to be disclosed. And finally, the corporate tax which is payable for the period. Next important area is what record keeping we have to maintain. In simple form, everything which you will be required to maintain as a support for justifying any transaction of income or expense, you need to maintain it for at least 7 years from the year in which you are for which you are filing the tax return. So technically it is 7 plus 1. Okay, it would be for 8 years. And same goes for exempt persons also. If you make any claim that you are exempted from CT and you are in those categories of government entities or government owned entities, or you are a qualifying charity, you are a qualified charity organization, and so on and so forth. So in that case, you still have to maintain the accounting records for 7 years at least. Okay, and for those entities who are subject to the transfer pricing, you also need to maintain the transfer pricing files, which include a master file and a local file in the form as will be prescribed by the authority. Now, this is very important here to know that the tax return which we are filing, this may not require us to have any supporting to be uploaded on FTA site. As we can see in VAT also, we do not upload anything. We only fill in the VAT return form and we upload it. That's it. But as and when audit happens from FTA, we have to maintain and we have to show all the supportings which we have here. Okay, so it is an important thing that our accounting should be appropriate, and we should be maintaining all the records which are prescribed to support any income or expense related transaction.